What a week we had in the stock market this week. Ladies and gentlemen, welcome to Wealth Done with me, Norbert PM, where I build and protect wealth. So for all you traders and investors, as always, we're going to do a rundown of the indices, take a look at what major news drew the market this week, go over a couple of earnings and what I think about the stocks. Also, go over my trades at the end and also go over future earnings that are going to happen next week. So if you're excited, hit that like button. If you're not already subscribed, please feel free to do so. And with this being said, let's just jump into this heat map, which was kind of confusing the last week. We started the week pretty normal, then it went red, then it went green, then tech went red, financials went green, then healthcare went extremely green with Eli Lilly jumping, hurting me because I have a little bit of short position on Eli Lilly. But let's just jump into what actually happened. So investor sentiment shifted this week as signs of resolution of the prolonged US government shutdown emerged, giving markets a little bit of lift. So that's how the week started. But at the same time, the ongoing debate with the Federal Reserve about whether December rate cuts are going to happen or not is still concerning the markets, as we saw in the major downticks right after they reported earnings. Much of the stocks did sell off, and tech and AI theme remains in the front and center, although valuations of AI adjusted stocks, because you saw that clip with Michael Burry, the big shorter investor, that said that Meta and Palantir and much of the companies are overblown, or they are reporting overblown earnings due to some book cooking, meaning that they're over-evaluating or extending the write-off on their servers. So we make macro data missing or delayed due to the shutdown, so job reports, markets are grappling with a lack of transparency, of course, which is kind of understandable why the markets are selling also. Energy, commodities, and alternative assets are quietly playing here in the background, but I don't think we're done with tech yet. So let's just jump into the major indices. Let's take a look at the S&P, which, well, ended the Friday on red. The entire week was just one roller coaster. It currently ended on a negative 0.5%. So the entire week was a 0.57% here. Growth for the S&P. The NASDAQ, on the other hand, had for the entire week a 0.12%-ish gain, also closing in almost negative territory. Dow Jones 0.8%, and Russell, which small caps continue to face headwinds and aim at macro uncertainties. I wouldn't bet on small caps right here. Now let's go to oil. Oil had a mixed week, kind of went up, down, as you can see here in the chart, and kind of ended in almost the 6 years range. It at one moment went even lower. Now gold tried it really hard. It went up, it went down, came back down again, and went up and went again down. Ending the week in the positive 2.71%. Also silver, kind of the same story here, dragging itself up and then back down again. So as soon as the fear in the market, this is why Wednesday was so hard, as soon as fears in the market spiked, gold and silver went up again, but at the Friday session they kind of went down again. So the VIX, look at it here at the VIX, the volatility index spiked a little bit. That's not too bad. A 22.8 spike for the weeks. I'm going to say this is a financial crisis, that this is a major market dump. I would just say that this is a well-earned, really natural pullback. Also, let's take a look at the dollar. The dollar index kind of did nothing. It kind of went actually down. So we're under $100 once more for the dollar index, which is not bad. Okay, let's take a look at a couple of earnings. I already did a deep dive into Rocket Lab here. Already kind of expressed my views on Rocket Lab. So let's just quickly glance over the earnings once more. Q3 2025 revenue 155 million, up 48% year over year versus consensus of 152 million. EPS was a negative 0.03 versus a estimated 0.05. So it was less bad, let's just say. And management did have some pretty good commentary that the stock strong backlog for 49 launches on contract, space system segment growth, but still negative earnings and high capex or high capital expenditure are still waiting for the stock. This is why basically it's kind of, well, having a really good correction here. Now, the outlook was that it's going to grow their revenue. So revenue outlook for Q4 is 171, 180 million. Watch for margin improvement. Also that conversion of the backlog, because they do have the backlog. The contracts can be resigned at the end of the day. So they really need to happen in order for that cash to come in. The macro sentiment here, growth in space launches services, rising government commercial spending in space infrastructure is rising, but the risk is high for the negative earnings that the company has for now. So it's not having positive earnings, not having any good revenue. So for the short term, if you own Rocket Lab, just hold on to it. For a longer term, if you want to really invest here, I will wait just a little bit. Maybe it gets even more oversold. Just take a look at this 40-ish 200-day moving average. So $40 per share would be where I would add for a long-term holding. But right now, I would just let this puppy correct itself. Okay, went public 2024. So let's just let them do their thing. Okay, next up is Cisco Systems. Good old Cisco. Really old, really old. First of all, before even getting into earnings and making any kind of, not recommendations, but educated guess here, let's just zoom out a bit. Okay, let's do an all-time for Cisco. Let's not forget that Cisco needs yet to reach its all-time high of $82, which it had back in 2000, so 25 years ago. Remember this when you're investing in this company for the next 3 to 5 years. Maybe it's not that bad of an idea, but just take that into consideration. Let's go back here to a 1-year chart. Just remember this when you want to invest in Cisco Systems, that this stock was once the all-time favorite, and then it went to, well, from hero to zero, not quite zero, but it went down. What was its lows? Lows were at $7.85 a share. Okay, but let's jump into their earnings. So Cisco reported Q1 financial result revenue of $14.9 billion, up 8% year to year. Non-GAAP EPS $1 per share. That's 10% up year to year. Margin non-GAAP gross margin growth of 61% and operating margin of 34%. So management said that the AI infrastructure orders from hyperscaler extend $1.3 billion this quarter, with a full year revenue target of $3 billion for 2026. The CEO says that they're on track, I quote here, on track to deliver strong year yet. So the outlook for Q2, the guidance was as following: revenue $15 to $15.2 billion, non-GAAP EPS of $1.01, till the maximum is $1.03 a share. So watch for campus network upgrades cycle, which is basically a constantly revolving upgrade cycle if it is necessary. So security segment should rebound and margins should improve. So for the macro theme here, AI infrastructure and CapEx, definitely keep a look on the cycle here. If they're still, so as soon as people stop spending, the big hyperscaler stop spending, Cisco is going to boom, go away. So be very, very careful on allocating any kind of money to Cisco Systems right here. Maybe first of all, wait for a little bit of pullback. I would definitely wait for it. I'm not in Cisco Systems, full disclosure, and would definitely wait for a pullback. Although short term, if this has a pullback to the 25-day moving average, because you're still expecting capital expenditure, so companies will still throw money at them, then they're going to have revenue growth, meaning that if this hits a $70-ish a share, even for a short term, this is a buy. Also for a long term, still a buy, at least for the foreseeable 12 months, let's just say. Okay, let's jump to the next one, which is Disney. Disney reported a Q4 with a revenue of $22 billion, which is down 0.5% year to year. Net income attributed to Disney $1.31 a share, billion, and a $0.73 a share, so 73 cents, versus a 0.24 share a year earlier. Adjusted EPS 1.1. Now, management commentary as following: CEO Bob Iger, which they brought back for whatever reason. He didn't change anything. Disney's still heading in the same directions. I don't know. Meet the new management said same as the old management. Okay, now strong prognosis from Bob Iger here in streaming and brand and IP leverage. Film box office hit. Lilo and Stitch, which I don't know. I didn't see it. My kids are not interested. I tried showing them Lilo and Stitch. Zero interest there. So if I think back in my childhood with everything Disney had to offer, from Lion King, which are my memories for great movies, I would say that's a flop. Yes, I don't know where they're getting their good outlooks here, because outlook is double-digit EPS growth projected for 2026, which you should watch for streaming subscribers growth. I don't think so, but let's just see. Fox experience rebound, yeah, maybe, and inline TV ad decline offset. So let's see if their ad revenue will grow. But Netflix is doing ad revenue. Amazon is doing ad revenue, so I don't see the growth here. They're not doing something revolutionary, okay? Macro sector theme, media consumption shifting to streaming, and, well, we need to monitor this, okay? Monetization also, and global growth. No, I don't have any high hopes here for Disney. I will let it go down right here, maybe then allocate some shares for some long time swing trade, but there are so many opportunities out there. Why Disney? Why Disney? I'm going to release a video on Monday about 5 stocks that I'm thinking of buying. Or you know what? I actually think I'm going to release it on Sunday. And then I had another one planned to how I would allocate $10,000 to a couple of stocks here. And Disney is not between them, but the competition is. So definitely to check out that video tomorrow or on Monday. I'm still thinking about when I should release it. Okay, let's move on from Disney. I'm not interested. No, nothing here. Just not interested in Disney at all. You know what? If you have a different opinion, please let me hear it in the comment section below. I love debating. Next up, Bitfarm, because we're finding big Bitcoin. So Bitfarm is having here sorry about being graphic here. They're vomiting their earnings. So missed earnings, 273%, missed revenue, 20%. The stock went down. But hey, there's nothing new. They're always missing earnings, so it's not like it's a profitable company. But this time, Bitcoin is also going down, and they didn't even mention Bitcoin. Hey, it's up today on the weekend. Bitcoin is up. You know what? Let's just keep this short with Bitfarm. Wait for a good enough correction. Let it oversell itself like crazy. Add a tinge to it if you want. Not financial advice. I'm not a financial advisor. Do your own research. I wouldn't invest in this stock at the current moment, because it's just too rich for me. Just look at this. $2 a share for what? For what? Okay, last but not least, a extremely interesting company here, Brookfield. That's the corporation, not asset management, not infrastructure. Brookfield. Real estate, asset management, one package. They own own big nuclear company. So keep an eye on Brookfield. I have a little position there. Now EPS forecast 0.68 for the fourth quarter. They missed their earnings. Earnings down 0.4%. The market said, that's it. Boom, dump. But they regained their footing really quickly here. Even if this stock goes down even more, I'm buyer. Take a look at it. Hold itself right at the 20-day moving average on the weekly chart. So exceptional company. Also had a split there, 3-2. I didn't really understand the split. I don't think they needed the split, but my God, they had this split. Okay, so a quick investor takeaway from this week. A couple of key takeaways is uncertainty is is a overall theme with the government shutdown lingering, but they're actually opening. So we're going to start to see some data here, and especially let's take a look at next week, because next week it's on, baby. It's really on. Monday, nothing interesting for me. On Tuesday, we have Home Depot, Baidu, PDD Holdings, and Powell Industry. Very interesting to see that one. Then on Wednesday, before the bell, we have Target, Loss, TJX, Wix, Williams-Sonoma, Globally, and then after the bell, we have 2 big ones. A really major one, which is, first of all, Palo Alto Network, and then we have Palo Alto Network Cybersecurity, and then we have NVIDIA. Woo! Can hardly wait for that one. Then on Tuesday, we have Walmart before the bell, and then after the bell, we have Intuit, Viva Systems, and Bull here. Webull. Man, I think I'm adding some puts underneath the expected move for Webull. Okay, that's it for this part. Now let's go to my trades. Let's see what trades did I do this week. So we ended last week with a positive $1,268 net. Gross is even more. And let's see what we did this week. So I'm just going to keep this short because it's not that much that I did. I held for a longer time the Commerzbank here. This is a German bank. I'm just going to show you something really quickly. So ticker symbol CBK. Sold this on the 12th. Boom, there we go. And got in 44.62. There we go. CBK. So let me show you something on CBK on Commerzbank here. There we go. So I sold it right on the 12th. Pretty good sell. As you can see, it came back down again. And it could go back up. Almost couldn't pronounce it. But let me show you something. So why did I sell it? Why don't I wait for a little correction and add back to it to go even higher? More certainly, let me show you something. Let me show you the entire chart. So you will say $33 euros. This is the entire chart looks at this like this. Okay. So back in 1898, and also its top was in 2000 with 347 euros a share, and it's now at 33 euros a share. You know what? I take my winners when I can, and I'm going to leave them there. This will never, ever rebound. So it did have an amazing 3 years here, 5 years. I do not care. If it has a good enough pullback, and I can add back for a rebound, I will do so. This is a trading position for me, and not in any sense a long-term holding position. So did my trade there, got my money, got out. Goodbye, Commerzbank. See you next time. Next up, another bank, PKO, Bank of Polski. For all my Polish friends out there, this is a Polish bank, PKO. So I did this on the 12th. Most of the trades I did on the 12th. Brought in 15.5 only. I was actually expecting more from this stock. Let me just do, but it just did not happen. It's also trying to trigger here another sell signal on the MACD. So forget about it. But it has had a really good run, and I saw that's it. It's kind of fluttering around here. I just got out of the trade. I didn't want to own this anymore. Maybe we're going to revisit it later on. Okay, next up, from this point on, I'm going to do a couple of dividends, and then I'm going to do a couple of options moves. So no more selling here. Got dividends from Costco, ticker symbol COST, and this was a dividend here. Everything on the 12th. So the 12th was really interesting. Got myself a Pro 6.73 because they don't have a big dividend yield there. Next up, Texas Instruments, ticker symbol TXN, also dividend, also on the 12th, brought in a proud 12.27. Then we got Leo Lithium once more. Leo Lithium, ticker symbol Leo. Also dividends, also on the 12th, brought in a 24.87. Then Realty Income, Realty, ticker symbol O, brought in on the 12th, a 27.83. And Berkshire Hathaway B. Now, this is the last trade, and if you want to hate on this trade, then please feel free to do so. Brought in, I sold my Berkshire Hathaway position, 94.97 euros, and that would be a $81 profit, net profit, okay? So here's the story with Berkshire Hathaway. I think it's going to happen. So it's not yet oversold. I think it's going to have another leg up here. Good for them. Then it's going to get oversold, and then they're going to have a pullback, and maybe then I'm going to add back to Berkshire Hathaway. The position that I had was a little bit too big, and I don't think Berkshire is going to outperform right now in the next couple of months. So I want to restart building my position in Berkshire Hathaway, but better price. I didn't like the price that I had, the average price that I had in Berkshire Hathaway, so I just sold on my shares where I saw the possibility. It's currently going into overbought territory. This does not stay overbought for too long. Here, kind of an outlier. This is overbought here, came back down. So if you would have added shares back here, it also never goes really oversold, excepting this one time. And this is also where I added back a little bit of share. That's why I brought my average price down. But I was kind of here. I don't like it. I wanted to come back, add back around here, and I will feel much better. Now, actually, I was here, 500 something average a share. So Wait for a pullback. Would consider adding some more shares to Berkshire Hathaway, but a smaller position this time. On a major correction, of course, add to Berkshire Hathaway. This was the best possibility ever to add to Berkshire Hathaway. Right here at the $460-ish a share. Okay, so currently $193 for this month. We're not quite done. Just can't add them here. And now let's move to options. So these were my trades, buying and selling stock. Now I'm going to show you a couple of options play that I had for the last week, which were extremely interesting, I would say. All right, so here are my options plays. First of all, the symbol LLY, Eli Lilly. I'm still bleeding in Eli Lilly. Over here to the last 7 days. Still bleeding in Eli Lilly, but I did a little swap here. Brought in, so bought a vertical, sold a vertical put with the strike of, with the short put of 940 and bought the 900. Once again, sold the 980, bought the 940 strike on for the 21st of November expiration date. Brought in $14, exited trade. So as you can see, this was on the 13th and also exited on the 13th. So this was basically a day trade. I'm still waiting for Daisy Trade to actually, the entire SEC to eliminate day trades. Let's see what they do. Because if you are caught with more than 3 day trades in 7 days, and then you're going to get a PDT, patent day trader strike. And if your position or if your net liquidity is underneath of $25,000, then you are going to get a only close strike, and you can only close your bit here. So you can only close positions until you get up. You cannot open any new positions until you get your $25,000 up. Okay, next up, did a little trade on Nike, ticker symbol NKE. Okay, so sold a December option with the 55 strike here on the 6th. Then on the 7th, sold another option. Same strike price, same expiration date, 19th of December. Closed them then with a profit on Friday of $94. Very good trade. Wanted to keep it open for even longer. Actually was further up, $122 or something like that. Missed the move, did not close the trade. And well, take your winners when you have them. Next up is AAPL, Apple. Did a little trade here, not a big one. So opened a vertical call spread here, sold the 280 strike and bought the 290 strike with the expiration date of 19th of December. This was on the 7th, but I closed it on Monday on the 10th with a positive $18. Brought in there priorly. Not much, but hey, win is a win. Take your winners when you have them. Next up, SOFI. They opened up with a double whammy here. Sold 2 options at the 26th strike price, expiration date 21st of November. Rolled them on the 7th of November and then closed them on the 10th of November with bringing in a $54. SOFI after that dropped. So good that I closed it on Monday. This was actually before they reported their earnings. Next up, let's get toasty with Toast. One of my favorite companies here. Okay, opened up a naked put on the 10th of November with a 34 strike price, expiration date 19th of December. Closed it then on the 12th, bringing in $19. Take your winners when you have them. Next trade was NVDA. NVIDIA proudly opened up a short put here, naked short put, really dangerous. Okay, if you can see the other ones, actually I do have a performance cover call here, basically a leap. I bought the 120, 40 in the 15th of January, so 430 days till expiration. Sold against it actually the December 19 call with the strike of $220, and then sold against that again. Actually can't sell it against that, but I should open up another call here. Bought another call, but I did sell a very quick trade. Check it out. I made it on the 13th, opened up on the 13th of November, sold another call with a strike price of $205, expiration 21st of November. Then 1 day later on the 14th of November, I closed that call and brought in $81. And that's basically it, because the NVIDIA did have that pullback. That's basically it for today's video. Hope you enjoyed it. If you did, give this video a like, really helps out with the channel. If you're not already subscribed, please consider doing so, because Wealthdown is dedicated to build and protect wealth, and I'm showing you each step that I take. And I'm planning a lot of more educational content in order for you to get your journey started in wealth building. Okay, with this being said, I'm Norbert Benhart. I build and protect wealth. Take care. Bye-bye. Bye-bye.